Welcome to TradeTheMBI.com. This is John. This report is for the 16th. Well, not that big a shock. We didn't even make it back down to the 50% on early weakness and bounced right off. And this was that buildup of shorts going here. At the same time, we had short-term buyers, and they can often squeeze them just hard enough to push them. Now, before, if you recall, a couple weeks back, we had like 26.12 was a resistance level. It's kind of about where we stopped, and we're just above it now. So that, like I said, leaves us open to all the way up in that 26.35 range. Nothing in the way of it. You can say that yes, this is still fairly weak and decent amount of short activity, but you still have enough buyers overwhelming that at this particular point. Now, slight uptick of orange. This is basically continuation. We're caught between the cyan and the red DOC, and whenever this orange is in between those range, you get continuation. We had the same thing when you're looking at it right here to the downside until it breaks, and I often get questions about that. We'll look at it at the 5K, because it's when that orange makes dramatic moves is when you can really expect a little bit more out of a particular move, simply because it's a clear indication of the algo activity and the ratio between long and shorts expanding dramatically. Something you're never going to see on an oscillator because it just doesn't recognize it that way. The NQ looking identical, actually a bit stronger. It's actually closer to the 61%, and you can see these P2, P3s. I'm going to show you a little later on the 5K an easy way to see those long breakouts related to the red DOC. The little bit of fade in the euro hasn't really caused any problem for the S&P at this particular point. It may be limiting its upside at this particular stage with the subtle decline. But of course, the Brit exit epic fail for May and trying to do the fake Brit exit, which really wasn't a Brit exit. I don't even know why they call it that, because they were basically going to stay in the European Union with no power and no voting rights, and it was complete capitulation. So not surprising that some people said, hey, this is not such a good thing for us. But that's their issue. But it does have an impact on what takes place elsewhere, because it meant no trade deal or anything special could be worked out with the U.S. or anything like that. From a gold standpoint, it's still keeping things elevated. This is an expectation of much higher inflation, and we may even be seeing some of that. The truly reported inflation rarely, if ever, reflects what's currently going on. It's always behind the time. Let's look at the 50K first before we move on to the. And here's the 50K. So what happened was we ended up started with the short and immediately got the dip below the orange right down here, and it started to climb and put it in a P2 right in this middle range with their little X's, which is an indication that your red DOC has made a significant improvement from the last time it rolled over, so to speak, and it was right about there, just indicating that it was going to be a turn back to the upside on it. It wasn't that bad from a short standpoint. You just had to have caught it early enough. The way this adjusted pink bar works on the 50K, it won't even trigger something unless it's below the 76. So when I see a signal that happens before then, like this spread right here, and critically here it is, it's that meeting point between two opposing forces where you have shorts in the form of the cyan, longs in the form of the green, meeting at this inflection point, separating, and you can see the algo starts to take off as far as the orange shooting above that 13.5, which really gives you an exacerbated move. Now, the fact that it completely reversed it immediately after, well, that's what caused the subtle turnaround, because basically they used everything they had, and that was all they could muster. And this is why sometimes you'll get more extended when it stays there. It's an imbalance in the ratio between the activity that's taking place. And so that's why we love it when we see it, that dip below the red line. It gets a little more problematic, and this is something I was talking about before, when it doesn't necessarily dip, but yet you still have a continual rising shakeout and or rising green. And we can utilize the red DOC to help with that, because this is a perfect example of it right over here. So we started the day with the big pump, and this is the nice thing about being able to take advantage of, breakout setups where you get this cyan steel rejection, but you may still have red over zero, because that happens a lot. And in this particular case, red was fairly healthy, and you still had rising histogram. So the likelihood that you're going to take some heat on something like this, absolutely. The problem with these tends to be that sometimes they'll break down pretty quick. I'm not a big fan of waiting until it gets down to the 76 of the support, simply because I want to be up towards the high, so if it does break to the high, I'm not really risking anything. So I'll look for the new high to be made and then attack into there, assuming that I'm still looking at the same configuration within it. And obviously, key point, DOC spread where it breaks down. But anytime that you have orange rising and you're in the same configuration where you have cyan rising, none of that happens after this initial one. So even if you get into the first one, of course, not that big a movement from it. But what was neat about this is that you have very specific price target. You have positive extremes that give you your expectation of where you should return to. Now, even if you want to give up some of that in the first one and look for it, then you have your least range. What happens is that you hit that, bounces up, and then, kind of in a rising three methods, falling three methods concept here, goes back up to the previous dip bar and then boom, collapses and breaks the low. But what was happening here is that we ended up with red DOC that wouldn't break down. And what you can do is you take this rollover pivot point, the high point of it, in this case, if you're looking down at the bottom there, it would be minus 869, and scrolling across, as soon as you break that minus 869, right there you're at 870. So it's like, okay, I've got my spot, but I'm slightly below green, even though and orange is already rising within the next bar. Clearly, well above it, as well as giving you your green. And you're almost meeting with your cyan at that particular point. Steel already being above doesn't really give you anything. Actually, if you're above 7.5, it's actually helpful, because above that they have a strong overbalance compared to shorts. But you're well below zero here, and that's where at the beginning of the takeoff, and it's just a nice move all the way through. You finally get the full orange all the way back here, once you break the 50%. So pretty clean. Exact same setup right here. Boom. Positive extreme targets. Filled them right in. And there's the little hump. Boom. That's target point. Same situation. Rising red significantly. Didn't quite get the orange dip. And actually green had crossed above for a brief period of time. But the key is then just following this from a consistency standpoint. Once it starts to roll over, or creates one of these setups where it produces a slight short, whether you want to be aggressive to take something like that or not. In this particular case, it works for a little bit, does come back up, but it ends up being pretty close to not a whole lot. It signaled much clearer here on the bigger spike of orange when you went way above. But it only goes from 2601 to 98 in 3/4, so not a huge move, maybe 2.5 to 3 points. But again, similar situation here, and this time we get a full buy slightly before the breakout, but it confirms it for you. So if you're in this and it's gone down a little bit and you're like, oh my god, did I get into something that's going to fall apart? No, you get the continued rise, you broke above it, you're expecting it is going to give you that breakout move. And then again, another rise to new highs. This sets up this positive extreme return, which promptly fills itself. And of course, likewise, this is the same situation. You're above the zero line, and you get that breakout move right there that takes place where big steel dip, orange, and the very strong with that move above a 13.5, just gives you an indication that it's a significant enough, sort of like earthquake, it's beyond that little. In California, you used to say anything less than a 3.5, you just like ignore. So this is sort of letting you know that you moved beyond that ignore level, which is like below 7.5, is modest. Doesn't mean it's not effective, it's just modest. This is saying, hey, there's something brewing here as far as the algos go. But again, from a risk to reward standpoint, from my viewpoint, I'm not interested in this at the low. I want to see a return back up towards the high. And that's where I want to be attacking it if I'm still looking at the same configuration, which nothing changes on it. I mean, you get a slight easing of the cyan there back towards the zero, but you're still looking at lower red. And again, that becomes a similar situation. It becomes one of those series of lower pivots. Does it again cleanly right at the DOC spread. So in this particular point, I already know that unless the red turns around and breaks this high right here, I get a pretty good shot that this is going to move lower, and it starts to do so once it breaks the 76, but kind of supports itself a little bit because you have the steel crosses the red, and then boom, orangey right there that you're going to get a bit of a pop right as the steel crosses orange. But then they meet, cyan and green, and the rejection lets you know that, hey, party's over for the long setup that way, and that takes place just a fraction below where the original entry is. This is one of those where if I'm in from up here and I've got my stop well above the 100%, don't care. If I enter right here, I still have a stop that's at the 100%, don't care. So it's one of those where, I say you have to prove it by beating you in order to scare me out, because I already know what my target is. I'm already looking for the low of this bar right down here at the 2605. So when I'm taking advantage of being up towards the highs, I'm up near the 12 area, I'm looking at a pretty decent risk to reward in that particular case. And then once you reach the positive extreme, I evaluate, hey, do I have bigger spread between the red and green on the decline, and am I still looking at weak steel action vis-a-vis? Is it still obviously below? It doesn't have to be below the cyan, just the crosses are what you're looking at, because when it crosses bullishly above right here, you got a warning sign right there that, hey, things may be ending. And then certainly when it crosses right here, it's like, okay, now I'm checking my green to see if it's pivoted. And again, here it is. There's the rollover, and this one's much cleaner to see. You got your red value. Oh, okay, I got a buy signal. Now the first thing I'm looking for, does it break it? Because that was a beautiful white candle that popped in there. Also P2 with our extra X values. And, oh, it just follows through and takes off. And so that's equivalently. Now the fact that this turns the light rose color is just meaning that it achieved from the white candle is just looking for a move above the 50% in this particular case. But if we were following EBM, you'd be right at it right here on the stall out, right around the 50%. But readings were still producing new buy setups, even right in the middle of that, right here. You have a dip down below, and then boom, as it pops. When it gets to its peak formation, because then we start to see, as it gets towards zero, when they can't get up over zero, and certainly if it breaks zero, that leads to another decline, which then led to the after hours, where they pretty much brought the shakeout to zero, bought it back up. We're already positive extreme one, so this will be an opportunity. They may even be filling that one back in right now. So, all in all, good stuff. But this is important to go over some of these details. This shows how clean the pink bar from that standpoint is. I think it's very straightforward. This is with the GAM. I'll go in there, and this one has the DOC rising on it, which just is telling you what's happening at the extreme. So if you don't want to have the extreme, you know, hey, I'm getting these warning signs. And then you always get the big little cluster that forms when you've reached your peaks, and they're kind of spread out and not consistent. You're probably not there. It's just casual warnings, but when you start to see them in clumps, that's when it usually happens. If you go back and look at charts, you'll see that consistently. So, All in all, good stuff. As always, though, trade well, and I will keep putting up charts on the Skype chat. Have a good one.